All right, good afternoon, traders. Thanks for joining today's guest speaker webinar. As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like BloodHound and Blackbird to help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and Shark Week is a part of that mission. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. Also, please note that ideas expressed by our guest speakers are theirs alone, and their services and trading concepts are not necessarily endorsed by Shark Indicators. Please do your due diligence before doing business with anyone. Chris Knox has been trading since 2003 when he retired as a police officer. He started ZoneTraderPro because he was paying for software that just didn't work as advertised. I think we've all been there. He has continued to add tools to his software suite since then. In 2018, he added real-time order flow analysis, and in 2019, he added the ability to analyze and classify large lots and other orders. Then in 2020, he added the ability to analyze the VIX using BloodHound. So with that, Chris, go ahead and unmute, share your screen, and we'll get started.
All right, welcome traders. What we're looking at now is live charts that we're going to be going over in some detail. However, for those of you that have never seen my work, what I'm going to do is I'm going to take you through basically just the basics of what I try to do with BloodHound and ZoneTrader Pro. And then we're going to come back to these live charts and understand them. I realize we're seeing a lot of data in front of us right now, probably things that you don't understand, but I like to keep it simple where I have everything in front of me on a minimal number of screens. And that's kind of how I do this. So with that, I'm going to go ahead and start the PowerPoint. Basically, what we're going to be looking at here is some new charts that NinjaTrader, a new chart type actually that NinjaTrader has developed, and basically how I use them, and not only just use them for ZoneTrader Pro, but actually in my real trading. And like Keith said, I started ZoneTrader Pro in 2007. Basically matching patterns and price. In 2017, added more. 19 added divergences, volume analysis, and then in 2020, when a website called Spot Gamma started looking for analyzing the VIX, and I've basically come to understand that the VIX really is the most important thing that we can have. So why is the VIX important? Well, it's because when options are traded, the dealers want to have no directional bias. I'm not going to talk a lot about the VIX and hedging in this webinar because I'm going to focus on the trade entries and exits and live charts. But I have 4 core charts, and one of them is dedicated to the VIX. If you do decide to purchase the ZTP software, I will personally train you, set up your charts so that you understand what you're doing. But I'm going to lightly touch on the charts and the concepts before going into the trade setup charts. So if you see something in either the PowerPoint or the live charts, or you have a question about the divergences, volume analysis, or the VIX, just drop a question in the chat or the question and answer, and I will go into a lot more detail. We're going to have plenty of time because all this stuff is really, all of the tools are just an important part of the toolkit. And like I said, the stuff about the VIX, I've learned all this stuff from Spot Gamma since 2020. I don't have any conflicts. They just billed me a full year. So I'm a paid subscriber. I don't really get anything from them. This is yesterday's chart, and what this is a chart that I refer to as basically my overview chart. And on the overview chart, this is it's going to illustrate that you have this large option strike on this yellow line and this black line down here at 0 gamma. There at 0 gamma, there is less volatility above that number and more volatility in below that number. That volatility increases below 63.94 because the dealers have to trade in the direction of the trend because of hedging requirements below 0 gamma. We're going to expect more volatility. And it's also interesting when we're above 0 gamma, where we found the initial support right on the open. And there really is a reason for that, because at that point we were in positive gamma. It was a big strike. And we did initially find, for a few minutes, we found some support. The green and red dots that you see on this chart are a proprietary zone trader indicator called delta strength. The ZTP delta strength indicator is picking up individual large lot trades. Oops. Something other software, something that other software, including NinjaTrader's order flow cumulative delta, cannot do. With NinjaTrader's order flow cumulative delta, if we filtered for trade size, it's only going to tell us the size of a fill, not the size of the order. And this is what makes ZoneTraderPro different. What is displayed as a filtered trade is useless because it's only the size of a fill. With NinjaTrader order flow, somebody sold 500, but 25 was the largest amount that was bid. You would see 25 in as the cumulative delta if 25 is what your filter was set for. You wouldn't see the other 475 lots as a 500 lot sell. What ZoneTraderPro does is it goes and rebuilds the tape to see the order size. We can see the order size. We can also create cumulative deltas and divergences based only on large lot trades. And that's something that I'm going to show you today. The selling was in the chart from yesterday, the selling was accelerated because options dealers had to hedge existing positions and new positions coming into the market. So if we look over here, this is why we're going to see all of these delta strengths, an extremely large lot order, over 1,200 lots, a 580 lot order. We're going to see that accelerate as we come back and get down to 0 gamma. Now, what's going to happen is if people had puts, those puts are suddenly worth a lot more money. And what they can do is they can roll those puts down. And that's a lot of times what we see at these large support levels. So where you see these green buys coming in right here, that may be a person that is rolling their put, which is now worth a lot of money, rolling that lower down to where they think the market may next hit, or their next lowest level where they want the insurance down to. So what we do is we have this brief 13-point rally as positions are either closed or rolled down, and then the selling starts all over again. The other thing that's important about these delta strengths is that this is not the delta of the bar. I just wouldn't throw delta of a bar up here and tell you it is something, although I know a particular vendor that has a so-called money ball that does that. Just puts the delta in there. Not really all that great of information. Delta strengths are the strength of a delta. And this brings me to how I begin my trade selection. I have 4 VIX symbols on the charts. They are the VIX 9D, which is the 9-day VIX, VIX itself, which is the 30-day VIX, core 90D, and the volatility of the VIX in that order. And this is from yesterday. That's at that same sell-off and to the low of the day. And you can see where BloodHound goes red at 0941. And that was when the SPX was at 6,400 at that support level, which ended up being the breaking point that I just showed you on the previous chart. The price initially traded down 37 points. The VIX is step one that I look at when deciding when to trade. Probably most important to me, though, is this third panel down here, which is the core 90D, followed by the VIX 90 here. What BloodHound is telling me on this chart is just when I have a zigzag, which I have programmed in using my zigzag indicator, I programmed in when I get a zig and when I get a zag. So if we look at something right here is when we first started to get our bullish zigzag to the low side. That's where the support zone starts to print. Briefly traded higher, and again, right here is where it flipped back to green, and we traded lower. Each one of these has a separate value for its zigzag. So what I'm having BloodHound do right here is just a really easy way to tell me if I am all positive, all negative, or some combination of the two. This takes me to probably what I consider my most important chart and my most important use of BloodHound. Top panel up here is the $ tick, and the BloodHound template that I'm using is one that I created called Tick Confirm. Second panel is a cumulative delta. And what is different about this cumulative delta is that this cumulative delta is filtered for trades of 25 or more. And that's important. So we're only looking at large lots here. I have other ways to look at just a regular cumulative delta, but what I really want to do is I want to see what the large lots are doing. So that's why I've taken my indicator, rebuilt the tape, and this is what you see right here. And just really important to know, you're not going to be able to do this with anybody else's software. The third panel down here is the ES itself, and with a special version of my divergence indicator. It's looking for divergences from low to a high to a low. So what that looks like down here is from this point here to this point there was actually a positive divergence in the delta was positive as the price fell for large lot contracts. So if you come up here and look at the large lots, well, you can see exactly what the indicator picked up. Our large lots were trading higher at that point. So I have a special version. I am filtering this for large lots. And then also on this chart, you see that I again have my special divergence indicator, and this time it's set at a filter of 50. So that's why you see a lot of these 50 lot trades. One of these successful trades is down here where we had fallen, and I say it's successful because we're trading with the $ tick. That's what I am looking for. I'm not looking to trade against the $ tick right here, or right here. Now, if I had been short for whatever reason in any one of these, if I had been short right here, well, that's an excellent reason for me to take an exit. But I'm not going to trade against my dollar sign tick or tell you that I would, because I just wouldn't take a trade from here, although that, did work out quite nicely. I'd rather take the trade from here where it's safe to do or safer to do. These lines in black, these were divergences that were became non-divergent. So that's what, nothing's going to disappear from chart unless you want it to. But these are two examples of what happens when the divergences bust out. The bottom panel is the symbol that I call core 90D, so I can see it in relation to the ES and the cumulative delta. Notice how the ZTP delta strength indicator began picking up the large lots and the buying at the lows. The idea of the chart is simple. Where is the tick living? So what I'm doing with my top panel and with my BloodHound template that I've created is I want to know where the tick is living. If it's living below zero, I generally want to be short. Above zero, generally want to be long. Not too hard. And this chart's also telling me what the large lots are doing with my delta strength, and can I generate any trade entries from using the special divergence indicator. Now, it would have been nice if we were here and we had this pullback and we had special divergence here. We can keep going. Personally, I probably would have just traded it anyway with or without the divergence, but that's what the purpose of having it on this chart in this space is for. This is the spot gamma hero chart. Hero stands for the hedging impact of real-time options. This is again for that same time frame from yesterday. It's looking at the 0 days to expiration trades. The calls are in green, the puts are in blue. The call sellers and the put buyers take over right after the open. This is what we're seeing right here. They were in conjunction, and spot gamma has the ability to use this total up here to see the total, but I kind of like to break it down between the two, because right here we have this divergence where the calls were actually being bought, but the puts were more forceful, requiring there's hedges. And when they're both together, we can see what's going to happen. Now, I'm a paid subscriber to Spot Gamma and I pay for this product, but the charts I just showed you also show the same exact thing in the form of the VIX and the other three charts. I personally find value in this tool and the other Spot Gamma tools for my personal trading, so I have them as tools. But are they absolutely necessary? No, they're not, because we have all this information in front of us on the VIX. This is my other use of BloodHound on the ES chart. Again, this is yesterday in that time frame. The chart is picking up the trend of the VIX. So let me emphasize the word trend. It is not meant to go red at a high or green at a low. So, don't think that is. So right here, where this thing goes green up here at the high, that is only picking up the fact that it took to this point right where we get to the high to flip 5 of the 9 trends, and then those trends, they then flip back and we see this huge sell-off. It's not a real-time go indicator. You had the trends going with you at this point. Same back here. Up here we had basically from that 6400 SPX strike, we had distribution divergence, and that kicked us off, initially with almost a 9-point trade right there. After that distribution divergence, trends changed. We see the bear shift in options, and price trades down. We just saw that on both the VIX and the spot gamma charts. That's what this is going to look like with BloodHound telling us. At the lows, we have real-time distribution short signals. So we have it right here. We have it right here. And we have a special divergence based on all contracts down here. With the delta on the low, that was a positive delta. So that's why we got this down here. And this was the low of the day. Price had fallen 9 points from our short entry high, which in and of itself, very nice trade. After falling the 9 points, the delta down here was a positive 572 contracts. And this is the volume analysis that ZoneTraderPro does. And the numbers you see at the high and lows at the apexes. So these numbers in here. Again, I'm not going to talk about this right here unless somebody has some specific questions, but we do, I do take an hour or two when I do training so that we talk about what is volume analysis and what I call my KP2 ratio. And the KP2 ratio is this down here. Basically, as we're going into this trade right here, what this is doing is it's saying that resistance is increasing. So if the line is getting higher, that's resistance. That's exactly what I want to see going into this trade. If we get into this trade early, say in this portion right here, we can see that resistance continues to build. And like I said, we ended up with a nice trade out of that and a winning trade out of that. So what we see right here is a line going straight across and price just taking off. What that means is nobody's willing to come in and put limit orders to sell. And this is what reinforces, this is why we're going higher. Nobody wants to put in resistance. So before I move on to the live charts, this is my trade performance for this week. This is real money. It's not a sim account. Also, the only thing I want to point out is what NinjaTrader does if you trade multi-lat contracts, again, size of the fill is important. It's not the size of your order. The actual trades were not 36. The actual trades were 21. And this was done with a very minimal amount of risk. So basically almost about $1,000 after commissions. And in order to get this, I did 21 trades and I'm using 4 micro contracts. So a very small amount. It's not about the money, it's about how many points you're going to be gaining from whatever amount of risk you're going to be using. So using just 4 micro contracts, I averaged about $250 a day this week, taking an average of 5 trades a day. And to be clear, this is not a guarantee that you can achieve the same results. And past performance is not necessarily indicative of future results. Sure, we've all heard that before, you're going to hear it again. This is my trading using my indicators and my decision making based on the trading plan that I created for myself. So what I encourage after training, what I encourage everybody to do is create that trading plan for themselves. ZoneTraderPro does offer personal one-on-one training at no charge after your purchase. And I do not charge any update or upgrade fees or yearly maintenance fees. Once you purchase a lifetime license, there are no additional fees, period, end of story. So let's move on to the live charts and look at the two charts that I use for trade entries and exits. I'm gonna shut that down. Okay, so these are, to me, the two charts that are most important to me and what are front and center in front of my face. The first is my chart that I have the dollar sign tick. I've explained each one of these panels to you. So let's move on to what is new. What is new is NinjaTrader came out and they created this Delta chart. And with the Delta chart, I've gone and put on the BloodHound template, although that's really not at all necessary. What I want to do is if I am interested in trading something, say if I want to get short back here, well, what I want to do is I want to look that first my tick is agreeing with me, and it is right here. The tick is now trading below zero. And down here, I am using the NinjaTrader order flow cumulative delta, and the order flow down here is not filtered. Very important. I'm looking at all contracts. So basically at this we've had really good trades. You can see up here, here's my resistance zone. Price trades right to the resistance zone. And if you look at the dollar sign tick, right as we're getting there, right there, we've come off my green tick confirm. And if I want to right there enter a short trade, well, I've got a very good trade out of that. Trades from 90 all the way down to 78, so something like 12 points. Again, same thing right here. I've got the cumulative delta, which is showing me this, I think we call that our hammer. So the delta had been up, it had traded down, and from that point right there to our low, we go from 80.25, another 12 points down. Kind of cool. Personally, I use my either just a straight points or I use my counter trend zone down here to take profit. So if I had been in this trade, I'm definitely out of it personally at somewhere around 75. We can see that we get our positive little pop up there, and that's kind of your time to get out of this trade if we haven't already just taken it from a profit target. Not likely to re-enter right here, although what we have going on here is of course interesting, where we have an up bar on a negative cumulative delta. Again, not too hard to justify, do some back testing and see if that's profitable. And, there we go. But we come down here and now we have the possibility of a long trade where we can see that as we're right about here on price, about 73, the tick is already trading above zero. And we then trade from 73 up to 15 points higher. Our only resistance was right here. Whether or not because we traded already here, like I said, I'm looking for 5 points. Personally, I'm out there. Can always, of course, the tick was still living above zero at this point, and if we re-entered again, 10 points from at least right there. Really nice. The next thing that we had a series of short trades here. And what I found really interesting about these series of short trades, especially this one right here, is that as we kept testing the highs, and so you understand the zigzags here are set to 5 points. So wherever you see a zigzag, there's at least 5 points. Right here, you can see how right at that high, we're now about a point off the high. Our tick is now below zero. But we can see that our cumulative delta has been falling all this time. And we have our trading signal right there with price at 92.25. Again, trades exactly to my counter trend support, something like 9 points later. Great trade. We can again make that same exact trade again with the tick living below zero, somewhere right in around here. And again, we get our 5 points. But what to me was just really interesting, why I highlighted it right before we started, is just how we see this, the cumulative delta telling us as we keep pounding these highs, the cumulative delta isn't agreeing, and neither is the $sign tick. That's kind of what is the main deal of this. Here again, here we see where here was a sell-off that went from 87 all the way down to 79. So an 8-point sell-off. So it is possible that as price is dropping, the $sign tick is positive. That's fine. Right there, here we finally have the agreement with the cumulative delta, and that's only like 16 points up until we lose the $sign tick up here and we start seeing the reds coming in with the delta strength. I can live with that. It's good. Same thing with right here. We come up to our resistance zone to the tick. We have our first cumulative delta down bar, and we again have our entry and a very good trade. Off of the open, the $sign tick was negative. Again, just a very good morning for using this as an entry tool. You notice that I am doing this from where the bar is going to close, not from the open, because this selling hasn't occurred yet. Kind of some of the things that I have noticed and is that in the mornings up until 11:30, these are when this is working its best. We don't necessarily want to be, you will see some excellent moves based on news during the day, but the most consistent moves are occurring in the morning. And basically what we're going to do is we're going to see what our tick says. And this is the reason I have my tick confirm on this chart, because I know without even having to look at the $sign tick chart that I'm sorry, this is actually pre-market. I know that right here, looking at my $sign tick, I can take this on the first negative cumulative delta. And we generally end up having some really good trades early in the morning where we can just see these runners. Again, interesting up here where price or the cumulative delta goes sideways, and it's not until we break out that price actually does trade higher and eventually up to there. Again, on this breakout, there is our cumulative delta being lower. Again, we trade down to our support where we would expect to see our support come in. It does, but what happens? Again, this is just so interesting. We see this 7 or 8 point pop in the market. It's not confirmed by the cumulative delta. And in fact, the tick was living above zero. And what happens? We trade all the way down from 11 all the way down to 94. And, I can't say much other than that. I've been using this now for about 5 weeks, and I just really like the combination of these two charts down here. One of the other things that I do have is my KP2 ratio. Again, higher means resistance, lower means support. And here, kind of a good example. They basically put in support up until this point, and then they stopped, or I'm sorry, put in resistance up to this point, stopped at that point. That's why we have the market going higher, is because this dropping is, again, that is support. So it kind of makes sense that the market did eventually trade a little bit higher. One of the things also that you need to know, if you are already a ZoneTraderPro user, I know there's a couple people in here. This is not, this is a new chart, and NinjaTrader has not made tick replay available for this. So what that means, if you're a ZoneTraderPro customer and just trying to learn about this, is that these delta strengths are only available in real time, along with the KP2 ratio down here, available in real time. The option for the data series is grayed out. So until Ninja allows us to use tick replay, and I've already contacted them, it will be in a future version, and then we'll be able to see all of this back in history. So if I take this back to yesterday, that's why we don't see a KP2 ratio. We don't see delta strengths. From my trades yesterday, though, one of the more interesting trades, I believe it was this one, as we got higher, we had a very good KP2 ratio, telling us that there was resistance coming in. And at the same time, we had falling cumulative delta. Now, for me, that's an excellent reason to be in a trade. And again, when we trade with all of our indicators, this thing traded down from 86 down to below 76. So 20 points right in there. And right in here, right there is where we had our red VIX. So not all that difficult, or I'm sorry, not red VIX, red tick. So not all that difficult to be using this as our entries and exits. I've always said in my training that the hardest part of making a trading plan is what you're going to do on an exit. And for me, like I said, I like to personally have a point target, but with this indicator, we're able to see trades that this one, not so much, because we had some green cumulative deltas in here, but there are significant trades that that will be 13, 14 points and not have any positive cumulative deltas. You may have an F bar, but you want to have a positive cumulative delta. So it really is kind of a really nice way to go set up. And the same thing, if you were long from back here, if you're reading this and you're reading this negative cumulative delta into the high, and then at this point at the high, you lose your $ tick, that kind of makes the exit a whole lot easier. You don't really have a reason to still be in this trade if you're not already out. Let me bring up, as we had this is our ES chart from today. Again, there's a lot of things that I can go over in a chart like this, such as, here, from 1025, excellent trade. We have our exhaustion pattern. Our exhaustion pattern is a trend reversal pattern, and only good for almost 15 points, 14 and 4 points. We have our divergence. All we really, we wait for our $ tick, and there we go. Here we have another trade trading into an exhaustion pattern. And again, what I train you, the first thing we talk about is what a pattern is. This trade gave us 6 points, really nice. But what I want to be short right here, first thing I'll tell you is no, because the exhaustion pattern is a trend reversal pattern. That trade didn't work. What trades did? Well, the exhaustion pattern on the low right here, exhaustion pattern on the high right here. Those are the trades that worked. Really, again, just interesting how we can go and we can develop trades. Again, here's our typical trend trade. We have distribution divergence. We can see our KP2 ratio indicating resistance rising, and we have a trade. Now, I do want to point out one thing about the divergence indicator, because the divergence indicator just doesn't magically start and pop up and tell you to go short right here. No, it likely first told you that right here. And what the divergence indicator is made to do is tell you if a divergence is present. So here, in all likelihood, we were. As we traded higher, it's going to tell you again. In other words, it's going to repeat or repaint and tell you that that divergence is still there. And it's going to do this until we get to this apex. So I want to be real clear. My indicators don't repaint, but the divergence indicator is made to continue to tell you if there is divergence. That's the design of it. It's not to try to trick anybody. If we go to look back here, here was an accumulation signal that busted. That's why it's in the blue. And it eventually traded lower into our exhaustion pattern. And what do you know? We get another 6-point trade higher out of the exhaustion pattern. In something like this, if you had taken this strong trend trade reversal short, this is where we would have gotten our signal, because that's where the zigzag flips from a zig into a zag, if you would say. And you have 2 reasons now to get out of the trade. The first is the real-time divergences down here, and the fact that this is an exhaustion pattern testing the low. So there's a lot of things that we can do with the ZoneTraderPro tools. The divergences are really cool. The VIXs are really cool. It's, we just need to create a trading plan that takes advantages of everything that we basically see here. And this is actually yesterday's chart, just to be clear. The global cursor was on. This is again today's chart. Just so you know, I personally there's three types of divergences. The first is the special divergence, the high from the low. This is normal divergence right here, and this is accumulation right here. I personally ignore the regular divergences and only focus on the special divergence that we see right here and the accumulations and distributions that we see over here. Let me bring this back to live. Let me bring the two indicators back to live, because we're going to have some we're approaching the close. Again, I would note how we get right up to my resistance zone. We've sold off 12 points. We get here our first bar. Our tick is living in the green, and that takes us from 89 up to 97. Again, real good trades can be made beginning of the day, end of the day. And kind of with that, I'm going to open it up to any questions. Hello, Dimitri. I remember your name. Anybody in the chat right now? And yeah, Michael, turn off the global crosshair so that we can see what this looks like in real time. And I'll just, anybody have any questions? No problem, Michael. It's I understand going slow when you're learning. When you're presenting, you kind of want to have all this in one place, so that people can see both the charts. But trust me, I get it. Okay, no problem. Mike has a question, but he's processing it right now. So while we watch what is happening, how this stuff develops in real time, anybody else have any questions? Because like I said, it's really nice when these things are working the same. And like I said, I don't really need BloodHound on the delta chart right here, but it is nice to know what that is saying. One other thing also about what you're seeing over here on the delta chart versus what we're seeing over here. The BloodHound template for tick confirm, this is bar by bar like you see it right here, and this is the I don't go by the tick confirm on this chart. I go by what is on this chart on the my dollar sign tick chart. What I want to see is I want to see the tick falling. I love to see the tick confirm, and we can basically see from our results down here what we're looking at in real time right now. We have that live special divergence right there. And if you noticed, I saw it come on, I think it was right about there. As it traded higher, we could see the divergence indicator tell us that it is still divergent up here. And again, we had a nice trade down here. 350 just started, so this is we probably don't want to be playing around right now. For those of you that don't know, 350 is the market on close time. So that's why we saw this big candle right here, this 4-point candle. And right now the computers have taken over and the market on close has gone down. Something really super interesting about this core 90D down here, we can use it to see stop runs. This is actually not a stop run. It would actually look the opposite. If it was a stop run, it would first go high and then go low to a low. But we are able to see that come there in real time. Another real nice short from right here, real easy to justify. Tick is living below zero. The core 90D, which is bearish, has jumped at this point, and that it's at least a 10-point trade out of that. Again, down to the zone, and we could re-enter, get another 3 or 4 points out of it. Now back to Michael's question. He asked, did I combine these charts with price action or AI Brooks style trading? As I don't know what AI Brooks style trading is, that answer would be no. Basically, whatever you see on this chart is something that I have thought of, and I want to keep my charts down to just the 4 charts that we see right here. Where is Mr. VIX? So here's Mr. VIX. This is live. So I have the 2 charts that we see in front of us right here in front of my face. Off to my right, I have this and the VIX because they are more of a reference chart. And so I try to get as much information as I can into these 4 charts. I hope that kind of answers the question, but directly in front of my eyes, I want to see what the $ tick is doing and what this chart is telling me. Off to the right is my my charts that I use more for reference. I do, of course, I don't on my charts, I don't need the patterns, obviously. They're there for demonstration, but I do want to know where my zones are. And again, one of the real big advantages of using BloodHound the way that I'm using it is this. Here we had our typical trend trade right here. And let's say we took that trend trade right at our support at 92. It trades up to 95.50. It actually trades 3.5 points higher before trading down to here. But guess what? This is part of the trading plan. And sorry, Michael, that we're on the combined cursor again. But why would I even bother to take that as a trade? If anything, I want to be short. And as it bounces up the 3 points right here and then starts coming back down, there's absolutely no reason to be in that, to be long. There just isn't. But let's say we, for some reason, were really super greedy and we wanted to get into this at 92. So we did. And then we see how the $ tick just doesn't support it, but we're still hanging on. Well, we're hanging on. But right here, right at our entry, the BloodHound VIX trend is telling us, hey, we should be out of this. And when the BloodHound VIX trend flips, we trade down from 92 all the way down to 84, right to my strong trend zone. It's not surprising. There's just so much. We get paid not for sometimes the decisions we make. We get paid by sitting on our hands and not just taking buy green, sell red, right? There's actually a reason to go short right there. If you're comfortable with it. There really wasn't a reason to be long right here. And at this point where you've got a wash, there is even less reasons to be long. And, that's kind of the point of BloodHound. It's doing a lot of work so that you don't have to. The question is about the KP2 ratio. You're seeing that print in real time. What these numbers are up here is the KP2. KP2 just stands for key point. So the KP2 is the delta from the low to the high in this case. The KP3 is the high to the high. So it's a positive 176. The ratio is a 39. You're seeing the 39 that is representative of the value that it was at this high. Now down here, these are the numbers that are live. So and they'll stay live until the market closes in 15 minutes. But the KP2 ratio is also bar by bar. So this is what becomes really super important. Not necessarily in this trade, but if we go back to right here, well, at this point, we can see that the resistance was rising into the high. That's what I want to see. It's now flipped into that we had our zigzag. It's flipped into support. Again, 1 minute from the close, we're not looking to do anything. It's just watch and see what happens time. But yeah, these numbers do print in real time. The zigzag prints when we have the 3.5 points, which in this case was this bar right here. And that's when the divergence indicator begins to look for divergence. So we've now gone a tick lower. It says there still is distribution or accumulation divergence. And the accumulation is the 57 compared to the 39. Now it's at 64. And we could lose the divergence as we just did because we traded down here. But that doesn't mean they're still not accumulating it. It's now 71 versus the 39 that was up here. Again, this is a close, so people are closing positions. We're not going to try to make a white paper out of what happens at the close, because also what's going to happen at the close is all the people with 0 DT positions, those positions are going to expire and the hedges are going to come in. And what's going to be really interesting is we'll look at this chart, and in 60 seconds, you're going to see the delta strengths coming in. And those delta strengths are basically going to be the options dealers closing positions. Again, something that is interesting. There's nothing tradable there because there's no way to guess what is going to expire and whether you should be trying to make a bet out of it. There's nothing there. And the last 10 seconds, we should start seeing a ton of these things print. 545, boom, 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 600, boom, boom, boom. And these likely represent options trades options dealers that just had positions expire on the close. So we see how that has come in. These are filtered on this chart. These are filtered for 100 or more. Where we see something less than 100, there are likely offsetting trades in there, or the bar is broken up because this is a 1,000 tick bar. So you're looking at something like that. That's why I say it's filtered to 100, but likely there is an offsetting trade right there, giving us a smaller number. Any other questions? Mike asks, for the NT trade summary, my Sharpe ratio was over 2. Says it's impressive. Is that typical? And my answer basically to that is what I'm showing you with my trade results are exactly, what I'm doing in real time, using my tools. You can't say something is typical because, I may make a different decision than you. For example, I might say on the earlier trade I showed you where from yesterday, the cumulative delta was lower and the KP2 ratio was higher. And I might state if I'd entered early, I might stay in that, whereas somebody else that didn't see that is not going to see that and, might bug out if it goes 2-3 points against them. So to say something is typical, you really can't do that. And, and that's hence the disclosures, past performance is not necessarily indicative of future results, because I can't think in your head. And trust me, you don't want to be running with the 2 little rats that are running around my head to make a trade. I know because I've created my trading plan, what it is that I want to follow. And that's really the answer. What is cool about this is I can take you and say, hey, look what happens when you have a trend trade, even though the VIX is green, but your $ tick is red. Look what happens. And we can load up 14 days and we can see that that ain't gonna work. That's really the benefit of these charts, to be able to come back and see, well, okay, here was accumulation divergence. At what point is it safe? Well, right there's your answer. Basically, less than a point off the low, it was safe. Or if you had been short from back here, okay, easily justify getting in right there. If the trading plan is not just getting into a trade, but the trading plan is getting out of the trade. And at that point right there, $ tick is above 0. And you can go back and you can back test that. That's the really cool part of learning, seeing this every day and learning and making that plan so that you can replicate what you see statically. So is it typical? I can't really say it's typical. I could just say that I have a plan, and I'll be perfectly honest. The very first day on Monday, I took 2 trades that were out of my plan, and guess what? That accounted for 2 of my 6 losses. 5 of the 6 losses were full losses, and two of those 5 were because I didn't follow my trading plan. So even somebody that has a trading plan, hey, you got to follow it, is kind of my point. But after that, I pretty much did follow my trading plan. Um, and that's what it comes down to is, can you follow what you are trading? And you get paid to sit on your hands just as much as you get paid to make a good entry and a good exit, right? You have all the information right there that you have to get out of that trade. Did you take that information? Now, so that time was 1448. 1448 is right here, right there. You had one opportunity right there. You had another opportunity right there on that low. You had 2 opportunities telling you with our new chart, hey, bust out of this. And if you stayed there short, you lost some of your profit. If you reversed it to a long, you actually made some profit. Anybody else with any questions? Let me bring the PowerPoint back up with my contact information. So basically, what ZoneTraderPro is meant to do is take advantage and follow what options dealers are doing because they need to hedge the ES and the NQ. We're doing that by following the VIX. I'm going to teach you how to avoid one of the things I didn't mention is that certain patterns are high risk. And I will, as part of your training, I teach you that. And we avoid that higher risk by trading with the VIX and with the tick. We can also develop divergences based on SPY as a proxy. This whole thing is about showing you real-time information. It's not about a moving average, crossover moving average. No, it's about real-time divergences, real-time analysis of the tick and what the volume analysis are telling us. And that applies to each and every entry and the exit. We can put all that in our toolkit. So my opinion, these tools are what I need to effectively trade. And it goes all the way back to 2007. Why I created this is I can go back and I can look at what the history is telling me, and I'm not going to have something that is going to give me a false signal and disappear from the chart like other people's software have done in the past. The package, of course, includes divergence, the entire divergence kit, and the volume analysis. My contact numbers are on the screen, and basically, if you do purchase the software, I give you a $200 discount on the software and digital delivery if we avoid using PayPal. So I do want to, there's like $100 in PayPal fees plus I'm required to mail you a disc. And then once you get that disc, I just install it digitally. But if you want to avoid that hassle, contact me and we will arrange for something other than PayPal. And that you can find on my website. Also on the website, here's my contact form. Again, you can just put your name in here. I do not add your name to any mailing list. I don't sell any of your information. If you do want to add yourself to my mailing list, you can come to the blog, enter it here, and you'll get my updates. Basically, when I develop something new, I want you to understand it. And so put out videos and blog entries. Again, really good set of trades. And, I just can't say enough about, figuring out this new chart type with our dollar sign tick. Just really kind of interesting. I don't see any other questions. If anybody has one, now's the time to drop it. And without seeing anything else, I guess I will turn it back to you, Keith.
All right, thanks, Chris. Appreciate you coming back for another Shark Week. Yeah, you're one of our regulars for a good reason. So, yeah, appreciate everybody asking good questions. Tomorrow, if I can be not humble for just a second, we saved the very best for last because we got Jeremy and Zach with SharkIndicators. That's us. We're going to be giving for those of you who are new to our tools and have been sort of getting glimpses of them throughout the week, just from various, some of the talks included use of them. We're going to be giving a solid introduction. If you've been with us for a long time, you've probably seen a similar introduction, so forgive us for repeating, but we want to get in front of people who are new and make sure that it's really clear what we do, why we exist in the first place, and why we've become, by now, finally fairly popular among the NinjaTrader ecosystem. But for those old timers, he will also be discussing the new R offset feature for Blackbird. I gave a hint of it in a video on YouTube recently, but they're going to do a little deeper dive. It's a simple feature, but very, very highly requested. So just release that, and we're going to talk about that. And for those of you who are new, we've got a nice discount that we're going to announce tomorrow as well. So be sure to not miss that if you're ready to go. So, all right, Michael, thanks for coming in and asking lots of good questions. Same with Jeff and Alejandro and all that. Have a great night, guys. See you tomorrow at noon Eastern. Bye-bye.